If there was a nuclear holocaust, I assure you that only two things would be able to survive it: cockroaches and the S&P 500. It was just a week ago. The doom and gloom was there, man. The Bears had the ball in their court and the volatility was crazy, but here we are. At the end of the week, this little bastard, that's right, I call it a bastard, closed at an all-time high. It's like a 67th or 68th of the year. It's almost tying 77, I think, in sometime in the 90s. Can't even remember. Unbelievable. Unbelievable. And I actually thought we'd see a little bit more volatility, but Tuesday sort of erased all of that. Let me back up. We did get some volatility, but still, the more things change, the more they stay the same, the unkillable one. Anyway, let me do the quick introduction. Doug here with Trade with Doug. Welcome to this weekend's recap. We're going to talk about stocks from last week. We're going to talk about a game plan for this week and where we're going to go with both stocks and cryptos. And I look forward to sharing some ideas with you. As always, if you need help, feel free to reach out to me at my website, tradewithdoug.com, or just down in the description box, connect with me in several different ways. So let's go ahead and take a look at here. I've got the futures up, and it didn't print an all-time high. Our all-time highs was 47.40 here. Let me get my trusty little pen out. 47.40. But this was an actual close. There was an all-time high close. So again, I think this is somewhere around 67 or 68 this year. Just phenomenal bullishness. Now, if you go back to last week, I kind of expected this volatility to bounce around a little bit more. I was kind of looking at back here, this type of area where I highlighted that it took about 17 to 20 days. So I felt the first period of this month that we'd probably be bounced around a little bit. And it kind of started out that way, but Tuesday's action was just insane. This was one of the biggest bullish days that I've seen in a long time. I think the NASDAQ itself was at 500 or plus points or something like that. But you sort of got this fake move. Let me open up this chart just a little bit more for you guys. You sort of got this fake move right here Thursday where it closed underneath of Wednesday's low. I was thinking, well, we'll just kind of trade sideways here and then break out. But you had this really big selling day. Maybe it was fear going into CPI. But man, the market snuck, and I say the word snuck because take a look at the intraday action here. I'm going to move it to some smaller time frames. You began the day going down. Like it looked at one period like this thing was going to finish itself off. Let me back this out here. You know, you had some selling there, so it looked like, okay, the failed rally after the CPI. Here we go. It's unable to hold yesterday's lows. This could get ugly. It didn't get ugly. It got beautiful. Look, the thing just blew right back up to, again, the word sneak, just snuck right up there, closed at an all-time high on one of the most volatile weeks. Man, you can't kill this thing. But there's a lesson in all of this, guys, that I really want to translate to you. What you're seeing right now is you always trade what you see, not what you feel and what you believe in your heart, because the truth be told, all of us, when we think emotionally, even the pros, when you think emotionally and you react emotionally, you lose money, man. You lose money. Your heart is almost always wrong when it comes to investing. That's why we have to rely on our eyes. And here's why I want to talk about this, because this is something I have been talking about the entire year. People are just now catching on. I was talking about this back when I was doing videos in March and April about what we were seeing, which was different. I'm going to show you this here. And remember, guys, the market just closed at all-time highs. Okay, the market has made 67 or 68 all-time highs this year. If you're looking at the market, it's going to go down as one of the most bullish in history this year, unless something psychotic happens in the last 2 weeks. But take a look at this right here. You had 47% of all the stocks being traded Friday were red. But more importantly, take a look at some of these. 58% of the stocks on the indices, 58, made new lows, brand new lows. 65%, man, are trading below the SMA 50, and 58% are in bear market territory. So what this means, I mean, it's obvious. And look at this. Look at these indices, you know? It's only a handful of stocks. Now, I brought this up originally, like I said, I think it was March or April. The NASDAQ back then had made an all-time high, and I remember that out of the 100 stocks that are listed in that ETF or indice there, only 11 were green. So what this is now is it's no longer a stock market. It's a market of stocks. If you're owning a basket of stuff, chances are more than half of it looks like shit, right? While the market's just blasting through all-time highs. So what's the best trade? The best trade is buying the indices, buying the futures, getting long futures on the dip. That's been the consistent this year. And I think I also read sometime, I don't know if it's true because I read it on the internet, but most things on the internet are true, right? I think somebody posted it, can't remember, I give them credit, but if you took 5 or 6 of the top stocks out of the NASDAQ, it would be down 30% this year or 25%. So just some enormous. The point is made. Majority of stocks that are being traded are bearish. And in fact, I think that was the name of my actual video I did in April or something like that. The only thing that's not bearish is the markets. And again, you're seeing that. And I have a whole list of them. And some of these we have been talking about here. For example, I can just go down the list here, but you have things like Spot. Let me put up some daily charts. You have Spot, ROKU, which we'll talk about here a little bit later. Somebody's going to it's going to take a miracle to save Peloton from going to zero. You've had beat downs in things like Disney. I'm just going to read off my oversold list. PayPal, Disney, Twilio, Okta, Payc. You've got Lulu and Etsy. I mean, look at Lulu here, Etsy. Some of these definitely, for sure, were overbought. And I mean, a lot of these that probably are focused on that is if you go back to the beginning of the year, February, March, we had this huge rally, and there was a lot of the cheapy stocks. You had, I think, I'm just going to say some dumb crap run. You had like this Tiger going parabolic to 38, DMTK, I think were some of these. I mean, look at these. They shouldn't have been. The case could be made that many of these shouldn't have been there, but still, even with the majority of stocks correcting, we're at all-time highs. So again, guys, lesson, trade what you see. Many times people cut certain positions because the market's going higher, the market's going lower. But if you're in that position and the reasons that you got in the position are still valid, there's no reason for you to cut it. So again, I'm expecting at this point, well, I was expecting we'd be volatile, but Tuesday I'm like, whoa, chill out. I think we hit this 47, 40, and maybe end up 48s. Who knows where we end up going? I'm expecting more bullishness, but again, you can be wrong. This thing is very volatile still. It's headline sensitive, but the more that we focus on it, the way I look at this now is this was an opportunity for bears to really take control. You had a lot of things lining up, and all it did was kiss a trend line and fire its way back up. And I think some of these old adages we use in stock markets are no longer true. I mean, we used to always say that stocks take the staircase up and elevator down. Well, now it seems they take the staircase down and the elevator up. I mean, again, you raced an entire weeks-long sell-off in like one candlestick. So, man, that's just the way it is. That's just the way it is right now. We all have to adapt to it. So let's move on. If we talk real quickly here about currencies, I feel Bitcoin here, now that risk could be back on the table. Let me pull up some charts here for you guys. This is a pretty good test down here of the 46.4s a few times. Nice little consolidation. Looks much like what we saw back here. I would expect that we get a little bump up towards 55. Maybe even 60. I think we're going to see a run of that because last week, one of the things I was talking about is cryptos are normally risk assets. When the market is acceptance and wanting to take risk, these assets get favorable. And I would think it feels now that risk is probably back on. So I like this one. I like this one for a bump. I looked at a little bit of Ethereum. Kind of the same thing, but I'm not so enthusiastic about the power of a bounce here on this one as much as I actually really like the way Bitcoin looks here. But let's talk about a couple of individual stocks. The question that I would ask myself or that I would think about is if the market decides to correct at some point, or let's just forget about that. Let's talk about some of these beaten up stocks. do they ever stand a chance at coming back? Because some of them look incredibly attractive. I mean, look at somebody like Disney, and I understand we've got a new COVID variant, and businesses can have problems, but still, we're talking about Disney. PayPal, I know there's other different kinds of payment software programs that they're a lot cheaper, but still, it's not a company that's necessarily going to go bankrupt. It's like a cheesy penny stock or something. You wonder if they're ever going to bounce. I have a few here that I'm looking at, and I have to say that, let me get my sheet out here so I don't forget. Top of my list really here, well, I'm actually already short some ROKU here. This to me is, I actually looked for this one, to be honest with everyone. I was looking for reasons to buy this. This was about a 55-60% pullback in this. Don't quote me to the exact percentage. But my thoughts were, I was thinking about maybe buying this for a quick bounce. The chart never really set up that gave me the confidence or the signal that I personally needed. Even though it did bounce, I never got a signal for this. I was looking for a little bit more basing. I felt, I said even last week, it has probably a $20 up day in it. Well, it did, but it was generated here via some news with YouTube where they were going to be listed or something. I'm not a news guy. In fact, I didn't even know this was an issue. And I thought, well, maybe it will hold for a few days and then sort of break out or something like that. But no, the very next day it cleans that out and then follows that up again with a little bit of selling the following day. Again, common sense, guys. Remove your hearts from the equations and your thoughts and feelings about something. Because if I put myself in that position, I look at something like this and say, of course you think it's going to bounce after a 55% sell-off. I mean, of course it's going to bounce. It's bounced before, it's bounced back here. It's going to find a way to bounce, even if that bounce is temporary. But on that token, you still need more data to make the trade. You still need a signal. You still need something like consolidation, some higher lows, some sort of structure in a chart to tell you, okay, the selling is over, because some people probably thought the selling was over here or here or here, and it's not. The thing I'm talking about here is, when you get a piece of good news like that, and it's this way for anything that you trade, it's an opportunity for that instrument to right its wrongs. So for ROKU, this was an opportunity for it to take this bullish news and run with it. It gave it back the next day. Now you tell me how you see that. I mean, tell me how you see what would be the catalyst now to get ROKU to come out of the hole, right? Think about it. What's the catalyst? You got a catalyst and you blew it. Like anything else in life, you blow it. What makes you think the second time or the third time or whatever time that's going to be different? I mean, it's okay to give a little bit of that back, but not all of it. And then 2 days later, you're down into the gap. This stock is dead, man. That was it. And in hindsight, now that just turns out to be a short squeeze, a little bit of euphoria that day, and it's over with. I would look for any opportunity to short any bounce. I wouldn't chase it. They can always have these squeezes. ROKU's a big beta name, so it can certainly squeeze up here. But this thing's going to end up all the way back down to 196, 150. This thing is done right now because everything, bullish market's at all-time highs, news catalyst favorable. It sucks. And that's all there is to it. Didn't want to say that about ROKU, but that's the way I look at it. This one is a short in my book. For some of you more expensive players, we've got some cheaper ones that we're going to look at in a minute, but not too bad here at Adobe for the sake of time. I just want to kind of cruise through some of these. This one looks like it's ready to kind of pop back through range of 650, 740. If it does that, I'd see 680, maybe run back to 700. Not too bad of a chart. ASO, this one I'm going to spend a little bit more time on it. I have a pretty good history with this one. I don't have always a good history with all the stocks I get in. I actually got this thing sometime, I think it was earlier year, 18, 20 bucks or something like that. And I sold my shares, but I've looked for a reason to get back in, never really found it. I kind of missed this little setup right here. This was an earnings pop. I don't like this candlestick on a normal occasion, but I'll let it slide right now because it's earnings. You got a nice sell-off early, followed by a green. I would prefer, like I said, just because something is there, you still need a good setup. I would like to see this trade maybe sideways for a day or two, just kind of confirming this bounce is legitimate. It was a little bit volatile Friday, But if this can hold, I would expect this thing to start making another leg up towards 54. Again, I wouldn't rush in and buy this thing first thing Monday. And most of you should never really do that with anything because that's the most emotional time in the market. But people are more emotional and more mentally emotional on Monday morning. So you sort of have to let some of the drama play out. But I do like ASO. I want to watch this one here. We'll see what it looks like maybe midday through Monday. You've got a decent look. eBay, here's another one. It's just kind of been sitting in the hole for a little while. It's one of those 58% or whatever the number was that's under its 200-day moving average. Again, look, this was an $80 stock not too long ago. You've got some nice holding here. It's tested 65, 90, 64 area quite a few times. Again, you still need a signal. All the data we have here, okay, you found some lows and you're holding some lows and you're building those in predictable areas because you have some support here and you have some support here. So not a secret. You have support. The market has stepped up and defended this into that 66 area right here. But it hasn't bought it either, right? The enthusiasm hasn't showed up into this yet. So I would look at this. If we can reclaim the 200-day, you got a couple of, let's open this up so you guys can see what I'm talking about. Got a couple of wicks right here, about 3 days in a row. The tips of those were 67.70. What I would like to see is a candle that can come up in here and just get through that and close. Remember, closing prices are important here if you're swing trading. You got to get above this level right here, get a nice little close, then we can start maybe working on a nice short-term trade that takes us up to 72s to 73s. Nothing fancy, but a little bit of cash right there. So keep that eBay there. It does need a little work, but sometimes that's the way it goes. They work, then they don't work, or sometimes they set up and sometimes they don't. AVCT, cheapy one here. I want to short this one. Yeah, I do. I want to short this one. Kind of wish I was already in. I mean, this one's been going down for, this is January. Here, again, another one of these that got, I've said it before, you had that low float, cheapy stock explosion that got started with the old GameStop and all that stuff in December, bled into January and back in, again, I showed you Tiger, DMTK, Vuzi, hell, put Pavement. You had all of these stocks that really went mad. Some that I thought were even going to go higher. I'm not going to lie about it. I thought some would go higher, but since then, many have just fallen apart. You got a couple of day bounce here. It was 84 cents into 229. You see the intraday rejection there on Friday. This is pretty aggressive, big tall wick. This is a short, ends up back at 1, I think, before the week is over for any of you guys that are into that kind of stuff, or gals, doesn't matter. And the last, I'm going to put APPS. I'm going to go with APPS. Last week I was thinking as a long. This week I'm thinking as a short because, again, just much like ROKU, unable to hold the gifting bounce it was given on Tuesday. And on that note, when I close, this is what I want to talk a little bit about. I know I said earlier, trade what you see. But there's also a valuable lesson that we learn this week is switching your biases and switching your directions. None of us can predict the future, right? Anybody that tries to feed you that shit is foolish. Trading is just a process. That's all it is. And things change constantly. And to be honest with you, most of the ideas I come up with, they don't work. But that doesn't mean I take them all. You still have to be patient. You still have to wait for the right setup. Tuesday's big bullish day blew a lot of the charts out. I mean, you're looking at things that were in the toilet here, just bad stocks that are going down, the ROKUs, right? This APPS. And everything starts running. So how can you just go in and buy a big gap up on a trashy stock because the market's up so much? Why would they hold? What evidence have they given you that they are ready to hold, that this time is different, such as ROKU? So never chase those moves. Never, ever chase those moves. You always got to let things settle. And here you see a few days later, unable to hold that. This is going to fill back in the gap. Kind of unfortunate because I thought we could go a little bit higher to the 200, but with this action and a poor close on Friday, and I just feel that was it. There's a lot of these now that I was looking at long that I feel this week are potentially going to be shorts, even if the market goes much higher. So anyway, guys, I'm going to wrap it up there. Game plan here is I really think ROKU is going to be the top short of the week just based on what we've seen. But It's Roku. Remember, it can squeeze easy $10, $15. It's a volatile instrument. It's not something for everyone. I really like the look of ASO and AVCT. ASO possibly is a long. Give it a couple of days, let it settle in. But this AVCT, I'm really interested in shorting. Just to see if there's any other kind of news that can pop that thing up. We'll see. But anyway, if you need help and you're looking for quality ideas, quality instruction, and consistent trading profits, make sure you visit Trade with Doug. You can visit our live community and trade with me every day. And you can also see the checkmark course and become part of the inner circle. Until next time, also don't forget, I'm going to throw this out here for anyone stayed around the end. Technical Talk is on Tuesday. We had a great time last week live on YouTube meeting everyone. So make sure you put that in your calendars. Until next time, trade well this week, guys. Talk to you soon.